welcome back to my channel. I'm Pluri, a local realtor here in Tampa with the real estate firm of Florida. I'm also your first-time home buying specialist. Again, this is going to be your go-to place for everything related to buying your first home here in Tampa and the surrounding areas. In today's video, however, we're going to talk about one of the most important steps in your home buying journey, financial preparation. By the end of this video, you'll understand why a strong credit score is crucial, how to save for your down payment and closing costs, the different mortgage options available, and why getting pre-approved for a mortgage is not only a game changer, it's pretty much mandatory. So let's get started. Number one, importance of a strong credit score. Well, first things first, let's talk about your credit score. Your credit score is like your financial report card. It shows lenders how reliable you are when it comes to paying back their money. A higher credit score means you're more likely to get pre-approved for a mortgage, and you'll probably get better interest rate too. For example, if you have a credit score between 660 and 679, you're probably looking at an interest rate around 7.4%, versus having a credit score between 760 and 850, then your interest rate would be significantly lower, probably around 6.8%. But if your credit score isn't where you want it to be, don't worry. You can improve your credit score by paying your bills on time, reducing your debt to income ratio, and checking your credit report often for any errors. It might take a little time, but it's well worth it for those lower interest rates and better loan terms. I always say marry the home, but date the rate. Some lenders often have relationships with third-party credit vendors as well. So, saving for a down payment and closing costs. Your down payment is the money you have to spend up front when you buy a home. Most lenders will require at least 3 to 5% of the home's purchase price, but if you can save up 20%, you'll avoid paying for private mortgage insurance, aka the dreaded PMI. PMI protects the lender from financial loss should you be unable to make your mortgage payments. So now, one of the biggest differences between FHA and conventional loan financing is that PMI is always required. I repeat, PMI is always required, regardless of the amount of money you put down. But in case of conventional loan, you can put down 20%, and after 11 years of payments, the PMI will be satisfied. So besides the down payment, you'll need to save for closing costs, which can be about 2 to 5% of the home's purchase price. These costs will cover things like title insurance, loan origination fees, and of course, Uncle Sam's money, the taxes. It's a good idea to set up a separate savings account just for your home buying expenses. Automate your savings if you can, so that a portion of your paycheck goes directly into that account every month. Some of the other monies you'll need are going to be for like your home inspections, appraisal once we get our offer accepted. So let's touch on an option to help you with your down payment costs, aka down payment assistance programs, my favorite, and grants, of which there are like 138 in the state of Florida alone. You and your lender can discuss which they offer and which work best for you. But for the sake of time, I'm just going to discuss the pros and the cons of DPAs. But stay tuned for videos where I'll discuss specific loan programs like NACA and others. But here are some of the biggest benefits of using a down payment assistance program. Number one, reduce financial burden. One of the biggest disadvantages is that they lower the amount of money you need to save up front. This can make buying a home possible much sooner than if you had to save for the entire down payment on your own. Increase power with assistance, or rather increase buying power with assistance. You might be able to afford a better home or a home in a more desirable area than you could otherwise. This can be a huge advantage, especially in competitive markets like the one we have here in Tampa. Favorable loan terms. Some programs offer favorable loan terms like lower interest rates and deferred payments, which can save you tons of money over the life of your mortgage. Homeownership education. Many programs will require you to complete a home buyer education course. And while this may seem like a drag, it actually helps you become a more informed, prepared buyer. Remember, not being prepared to succeed is being prepared to fail. Possible grant opportunities. So some down payment assistance programs in the form of grants which don't need to be paid back. Yes, free money to help you buy your home? Yes, please. So here are some of the cons of down payment assistance programs. Of course, there are always going to be some aspects, ingredients, or something that just makes something else not as good as it could have been. So number one, eligibility requirements. These programs often have strict eligibility requirements such as income limits or credit score minimums. Not everyone will qualify, which can be understandably frustrating if you need the help but don't really meet the criteria to get the help. But chin up, because there's always more than one way to skin a cat, like lease to buy options, which I'll discuss in another video. Limited availability funding. So funding for these programs can be limited and they might run out of money before you get a chance to apply. It's important to act quickly if you find a program that works for you. Florida has one called the Hometown Hero program for assistance that offers millions of dollars to Florida residents towards down payments. Funds are typically available July 1st and typically run out around December or even sooner. Additional paperwork applying. So applying for down payment assistance can involve a lot of extra paperwork and documentation. This can slow down your home buying process and add extra stress. I give my clients a free thumb drive to keep their documents up to date in one location for quick and easy access. Give it a shot. Possible higher interest rates. Yes, in some cases, using a down payment assistance might mean you end up with a slightly higher interest rate on your mortgage. Over this time, it can increase the total cost of your loan. Repayment obligations. So not all assistance is free money. Some programs offer loans that need to be repaid often with interest. Most will make your payback the money's back if you sell or rent the home. So make sure you fully understand all the terms before you commit. So let's do an overview of mortgage options and interest rates. There are several types of mortgages you can choose from. The most common ones are fixed rate mortgages, where your interest rate stays the same for the entire life of the loan, and the adjustable rate mortgages, where your interest rate can change over time. Fixed rate mortgages are great if you plan to stay in your home for a long time because you'll actually know what your payments will be each month. Adjustable rate mortgages might offer a lower initial rate, which can be helpful if you plan to move or refinance in a few years. Interest rates can vary based on your credit score. So the type of loan and the lender, it's really important to shop around as much as you can to compare offers. Most lenders will only do an initial soft credit check. Even a difference in interest rates can save you thousands of dollars over the life of your loan. So getting pre-approved for a mortgage means a lender has looked at your finances and determined how much they're willing to lend you and at what rate. This not only gives you a clear budget of your home search, but it also shows sellers that you mean business and that you're a serious buyer when we attach our pre-approval letter right to our offer. To get pre-approved, however, you'll need to provide some financial information to your lender, like income, debts, assets. It is a little bit of a paperwork problem, but having that pre-approval letter can be a big advantage when you're ready to make an offer on a home. And that's it for today's video on financial preparation, first-time home buying in Tampa. Remember, strong credit score, saving for your down payment and closing costs, understanding your mortgage options, explore all down payment assistance programs and grants, and getting pre-approved are all the crucial steps in your home buying journey. As always, if you found any value in this video at all or help, please give it a thumbs up, subscribe to the channel. For more tips, leave any questions you may have in the comments below. Thanks for watching, and I'll see you in the next video. Happy house hunting, everybody.